So, welcome to our second ever wealth webinar. The purpose of this webinar is to discuss the significance of the recent partnership between telecommunications giant Telkom and Fintech innovator of note, Easy Equities. To do this, I've prepared a presentation that gives us an overview of financial technology in general, in an attempt to contextualize the conversation, because I believe that those are where the true insights lie. I hope that by the end of this session, you are enlightened about the prospective value of a company like Easy Equities, right? So I'm going to share my screen in order to share the presentation with you. And there we go. We should be good to go. Okay. I just want to ask Emmanuel, for the purpose of this presentation, I do need to move this out of the way. I think I can simply minimize it. There we go. All right, so let's get right into it, right? Telkom partners with Easy Equities. These are our objectives. The following key takeaways are to guide us in our conversation. They are set up to help us get a good overview of the entire financial technology industry. So first on our item is the value proposition of a bank. I believe that this is where we need to start, as for the longest time, banks have essentially had a monopoly over the financial service industry. Next, we'll be dealing with how South African fintech companies are disrupting the space. See, getting an overview of the entire market helps us think about Easy Equities more clearly. You might think that Easy Equities itself is quite valuable, but you'll be shocked to find out that it exists within an entire ecosystem of disruptive businesses that have the ability to compete across borders. This ecosystem collectively accelerates the financial technology industry and indirectly benefits Easy Equities, creating the environment necessary for a fintech company to thrive in South Africa. Then last on our item, we'll be dealing with Telkom Pay and Easy Equities. We'll wrap up the conversation by briefly going over the details of the Easy Equities deal, providing insight on why it's absolutely imperative, well, at least in my view, to have exposure into Purple Group shares. My fellow investors, I now open up the floor with a question to you all. A question that obviously I know the answer to, but I'm interested to hear your thoughts. The question is, what is the value proposition of a bank? You know, to put it simply, why are banks important? Why do you think banks are important? What do they do for us? And at this point, I'll ask Emmanuel to unmute everybody's mic so we can have a quick discussion on this. So Emmanuel?
I believe, yes. Everyone is
unmuted. So who wants to tackle on the question first? The question is, what's the value proposition of a bank? You know, to make it less intimidating, simply why are banks important? Have you ever thought about this?
I'll go first if that's okay.
All right.
So I think banks offer a sense of security when it comes to storing money. And then they also offer, like they do, have a great deal of importance when it comes to lending and having to an amount of money that you won't necessarily have without them. So they are a source, quote unquote, income when you want to do major projects, and they offer safety. That's my opinion.
Yeah, so if I get it correctly, safely storing your money somewhere and borrowing money when you need to. Anybody else have anything to add on to that? So storing money and borrowing it. Who has a little more insight?
I would say that it's more or less the same thing that she said. Like this, I think when you ask the question like, what's the value proposition? You're asking why are they important to us, the people who utilize them, and it would mainly be for those reasons. They also can provide like a gateway into, I guess, investing on a much lighter scale. For people who
Okay.
are in understanding about that, they also offer opportunities into that. But I'd be lying if I said I knew how much depth they provide in that particular domain. So yeah.
Yeah. I like that. So we've identified three things so far. We've identified that banks allow you to safely store your money somewhere. Banks allow you to borrow money, and banks also allow you to invest money, right? I'm very impressed at your answers because it is a simple answer, but you're going to see just how significant and how thoughtful your answers are in a moment. Can anyone mention a fourth thing that banks do? Apart from allowing you to store and save money, apart from allowing you to borrow it, and apart from allowing you to invest it.
I see
It's
Michael
difficult,
has a
right?
hand. Michael
All
has
right.
a hand up. He just
Unmute
needs
Michael's mic and let him
Yeah.
try answer this.
Yes, I think he's there.
Yes, sir. Okay, so yeah.
Yeah, so with regards to the topic, I think most of banks are record keepers. So they just basically keeping record of everyone's money, right?
They keep record of everyone's
money, everyone's labor, everyone's time, what comes in, what goes out.
Yeah, that would fall under storing and saving your money, right? So I want to continue.
Like administration-wise, like
so that administration helps them allow you to store and save money securely. It still falls under storing your money. All those administration functions are just a way for them to help you store your money safely so that they don't lose record of who has what money, right? I want to continue the presentation and put everyone out of their misery. So I'm going to share my screen again. Can everybody see this?
Yes.
Are we good? Can you see this?
Yes.
All right. So moving on, right? You guys almost had all of them, which I'm very impressed about. To put it simply, commercial banks are a service business, and their services can be organized into 4 different categories. These are not formal classifications, but a way to help us effectively think about their value proposition. So first, if you look over here, I've written payment services, right? In the first category, we have payment services. And what I want you to do here is to think about the function of your wallet. And I mean your actual physical wallet. You see, in it, you store the amount of cash you might need when the moment presents itself. For example, you might need to give that money to someone else, right? You also might need to pay for a product or service that you're receiving. Let's say you're getting a haircut. What you need is not only the ability to store your money somewhere specific, but also, and not lose it, but also you need a way to timelessly access that money to give it to the merchant who's providing the service. So not only do you need a specific place to put it, that place needs to be accessible. The purpose, and this is the purpose of your checking and savings account. You see, your savings or checking account at a bank is a specific place to store your money, one, where you can access it easily and very importantly, quickly. This is why ATMs are located in as many places as possible. Later on, you'll discover that this value proposition is not the smartest way in today's age of delivering this service, because all the bank's infrastructure is quite costly, capital intensive, right? So it's a specific place to store your money where you can easily access it. And the advantage of a checking or savings account over your physical wallet is that you don't need to physically be in the same space as someone else in order to give them your money. So that's a big selling point on the value proposition of a bank. The fact that, Emmanuel, I don't need to be in the same space as you in order to give you money is the reason why I would take my money and put it in a bank account in the first place, because it makes it easier to transact, right? You'll see here I've written on the presentation, hold deposit accounts like checking or savings account, also allow merchants to move money between these accounts, right? Um, I just want to see here. Okay, so next we'll move on to lending services, right? Right. So we've discovered, we've decided that banks allow you to store and send money between people, but now we're on to lending services. So not only do you need the ability to store your money and pay with it, sometimes you just don't have the money to begin with and may need to borrow it, right? Before commercial banks, we typically borrow money from our friends and families. But banks have stepped in to provide us an institution where we can formally borrow that money. I think Tembela said that quite eloquently, to say that, you see, with a bank, you might be able to access more money than you would have not from your friends or family. So lending services come in the form of personal and business loans. Businesses can also loan money the same way people can, because in the eyes of the law, a business is a juristic person, which means that under the law, it is an entity much like you and I are, right? And so apart from lending services, we then have advisory service. Please excuse me. Give me a second. I just want to check something quickly. All right. So apart from lending services, we have advisory services. So we've established that banks allow you to store, transfer, or borrow money, right? This is store and transfer. This over here is borrow money. Next, you have advisory services. Financial services can get a little more complicated because as you become wealthier, you start to have an excess of money, right? So as you become more wealthier, you have more money on you. And the longer you store, you store this, sorry, let me start again. So as you become wealthier, you have a lot more money to store. And the reason why you have a lot of money to store is because you simply can't spend it all at once. You don't need that much money. And the problem with storing money for a long period of time is that it loses value. You see, even the bank does not keep all the money that you deposit into your accounts. Right? I don't know how many people know this, but when you deposit money into your bank account, the bank is legally allowed to take 90% of the money you deposited and lend it to other people or businesses, as well as buy assets like equity and property. This is called fractional reserve banking, and it implies that banks are only legally required to hold a fraction of the reserves you have deposited. So Emmanuel or Miles, every time you take your money to the bank and you put 100 Rand in, they're allowed to take 90 Rand. They don't even keep the entire 100 Rand. They take 90 Rand and lend it out to businesses, or they buy equity or shares to add on to their asset balance sheet, or they buy property. So from what I've just said, it is easy to see how most of us can easily store and borrow money and also transfer it, but very few of us actually know how to manage our money. And this is why advisory services are important. You'll see here that I've written that there will be an investment advisory service that helps people invest their money. This will manifest itself in the form of registered or financial service providers. So that's the third pillar, right? And now the final pillar of financial services for me is the most exciting. That's your investment services. You know, this is actually very similar to your lending services, but the difference is instead of you borrowing money from the bank, you now have the power and are lending that money out to other businesses, right? When you invest money, I don't know how many people actually understand, but when you invest money, what you're actually doing is you're borrowing your money to a business the same way a bank would borrow money to you, and obviously for something in return. Now, there's two ways that you can borrow your money out to businesses. Similarly, there are two ways a business can raise money from you. It's really the same thing, either through what we call debt financing or equity financing. Simply put, this means that when you borrow your money out to a business, it is either in a form of a loan to the business, or you're buying a piece of the business in the form of shares, which is also known is equity, right? Moving on to the next slide. So in summation, the value proposition of a bank really is to store, move, borrow, and manage money, right? Now, I don't know, Emmanuel, you can bring everybody back just to see if there are any comments, and if there aren't any, I'll continue with the presentation.
Okay, we'll do.
Does
leave it
anyone
on.
have a, yeah, while Emmanuel is unmuting everyone, does anyone have a question about what I've just presented? Was it clear? Was it everything you understood? Did it help the conversation about delineating the value proposition of a bank?
I think it did. I think that point that you raised, that you said it takes 90% of, they're legally allowed to take 90%, I believe, of your money and use it, and then only a fraction of your money will be stored in a bank. It's a good thing to note, to really see what banks are up to, I'll say. So that's just more of a comment. Okay?
How many people knew that? Tembela, since we only have you for a short time, did you know that when you deposit, you know, when you think about taking your cash and putting it in a bank, I would imagine that you typically think that that money that you put in there is yours and nobody's allowed to do anything with it. You're just storing it in this safe place called a bank.
Well, I sort of knew, because I mean, the bank needs to make its money somehow, and the amount of interest and the bank charges that they charge people to store the money there, is it enough for it to exist for eons and eons? So how they do make their money essentially is because they're in the lending and borrowing game, where they'll just use people who store their money in the bank to take their money invested, and that's how they get their big return.
Yeah. So I would think, Tembela, that I understand that the bank is in the lending and a business, but I would think that they lending money they make off of the profits of the millions of people they serve every day. I didn't think that they're taking my money out of my my savings account, right? My savings account, and giving it to other people and making money off of it. Did you have, Miles, did you have that perception of a bank?
I had that particular perception in mind, but you know, like there's an understanding that at the end of the day, you know, like while banks are quote unquote there to assist you with finances, it's also very limited. Like there's a lot of things that happen that you don't understand. So it's one of those things where, while I didn't know the logist or the specifics, I'm not surprised. You know, I'm genuinely not surprised, because these are people who are, they're businessmen first. You know what I mean? So it doesn't, just because you're the customer doesn't necessarily mean you come first.
Yeah. So I mean, it's pretty interesting. It's pretty interesting to know that, you know, banks are always encouraging you to save your money. But as soon as you give them your money, they don't even save it. They take 90% of it and they lend it out to other people. This is why it's a problem. If everybody were to request their money from the bank at the same time, it causes a panic and a crash, because the bank might not necessarily have that money on them. They have a fraction of those reserves as stipulated in the fractional reserve banking system. This has happened multiple times before, where people during a market crash panic, and then they go to the bank trying to take out all of their money, and all of a sudden they find out that that money is not there. South Park actually has an episode on this, where bank tellers randomly tell people that their money is gone. They don't know where their money is, right? So, I mean, we can continue now that we understand the value proposition of a bank. In order to keep the presentation succinct, we can continue. And what I'll do here is I'll share my screen again. So give me a second. All right. This is where we are. Can everybody see this?
Yes, we can.
All right. So this is the exciting part, right? We have established that we have established the four main categories that help us think about the value proposition of a commercial bank. In the beginning of the presentation, I also mentioned that banks have essentially had a monopoly on the financial services industry for as long as we can remember. Well, that is all beginning to change, and it's happening quicker than we even realize it's happening. Various technology companies have infiltrated all of the value pillars of a traditional bank, and they can do so because there's less regulation when it comes to a technology company. There are various barriers to entry when you are a bank, but technology companies have bypassed that by offering services that directly compete with the value proposition of a bank on those four pillars, without having to call themselves a full-size bank, right? So we'll go back and start with payment services, right? We now have the introduction of completely branchless, data-driven neobanks. Neo meaning new. These banks have the ability to provide deposit accounts at much cheaper rates than your traditional bank. In South Africa, examples of these are Time Bank and Bank Zero. I am particularly excited about Bank Zero as it was founded by the legendary former CEO of FNB, Michael Jordan. Right? And Michael Jordan is part of the management team that led to revolutions like for FNB, I think it's e-wallet. So he understood this. E-wallet is a form of digital wallet. He understood innovation that's happening in the banking world and all over the world. Yeah, in the banking world, not only in South Africa but also all over the world. So he's the one who has led FNB to being such an innovative digital bank, right? Of course, he couldn't change everything because banks, there's a lot of moving pieces in order for you to change anything. And that's why these technology companies have such an advantage, right? So I'm going to share with you some quotes from Michael Jordan, some tweets to be specific. In the first tweet over here, Michael Jordan says that Brazilian fintech company Nubank is now the largest neobank in the world with 33 million customers and a $25 billion valuation. That valuation is half Itaú's market cap, the largest public bank in Brazil, which has been around for more than 75 years. In the next tweet, Michael Jordan says, when I left FNB in 2013, I had no idea I'd return to banking ever again. But 2021, we start competing. And if you look down here, it says Bank Zero prepares to face intense competition soon. Now, this is a tweet from actual Bank Zero. It says, Bank Zero cannot be compared with the incumbent banks. They are still in the world of yellow pages and SMSs as opposed to Google and WhatsApp. Paying for electronic banking will soon seem as silly as paying for email and messaging, right? And on that note, I'd like to share with you something I thought would be pretty insightful. And this is the fee structure of Bank Zero. You'll get to understand why it's called Bank Zero. So if you look closely here, the monthly fee for holding an account at Bank Zero is zero. This was quite comical. The minimum balance in any account that you're allowed to have at any time is zero. Notification on all your banking activities, zero. Open more savings account, zero. Pay a recipient at another bank, no bank charges, zero. Pay a recipient at Bank Zero, pay a recipient at Bank Zero using the QR code, pay a debit order, pay by card. They are zero fees for holding your money at this bank, which is unheard of, right? I thought that was pretty interesting just to see how neobanks are really coming over to threaten our traditional commercial banks as they stand. All right, so this is happening in South Africa. If you're interested in finding out more, follow Michael Jordan on social media. He's also the guy who informed me that soon, and very soon, our children in our generation will find it ridiculous that we once had to go to branches to access our money, that banks had these physical buildings and branches. So everything is moving digital, right? So let's continue. Right. I've written here completely branches data-driven neobanks like Time Bank and Bank Zero. Still under payment services, we have the introduction of digital wallets. I want you to think about our analogy from earlier. Digital wallets essentially provide you the ability to store and transfer your money where it is needed. So it only exists here in the payment services. Examples of these in South Africa are Global Shift Wallet and SnapScan Wallet. You might be more familiar with global players like PayPal and Venmo, but I assure you that the South African companies are just as capable. So digital wallets are a technology company that allows you to securely store and transfer your money. They're not categorized as a bank. Therefore, they do not need to go through all the regulations that a bank has to go through. So they are threatening the bank on the payment services pillar, right? You also have social media-based ecosystems, right? This is where Telkom Pay comes in. They leverage user data in order to offer tailored financial services to the user base. Global players in the space are giants like Alipay, right, from Alibaba, and Wechat Pay. The Chinese social media company that's akin to WhatsApp, Wechat. With the difference between WhatsApp and Wechat is with Wechat, it's not just a social media chatting service. You can actually pay for goods and services. You can order your car, your Uber ride without leaving your WhatsApp. So you can literally find a place to eat on your WhatsApp. You can book a space at that restaurant. You can call your car, and then when you get to the restaurant, you can pay, all without ever leaving your social media app. All right. Now, still innovating these spaces are decentralized technologies like cryptocurrencies, which is a monster of a topic and I believe deserving of its own webinar. So not only do you have all these threats on the payment services side, you also have an entire new industry called cryptocurrency, which is crippling, which is doing everything that this bank does here, but much quicker and much faster, without the need of a decentralized institution like a bank. So it's also doing it much cheaper. And Emmanuel, for now, I think we can bring everybody back just to reflect on the competition on the payment services side.
Okay.
Yeah, guys. So how was that?
This is fascinating. I'm not gonna lie.
Michael. Miles, you're still muted.
Yeah, I think after
Emmanuel, what's fascinating about this, Emmanuel?
It's the way you've also packaged it to look at the different value propositions of our traditional banks that we hold, and now looking at the value propositions that these new fintech companies are offering. And now I look at I've never heard of Bank Zero. So now to look at it and look at all of the stuff that they're proposing that other banks, are charging. Let's say just that thing of a monthly fee. I'm like, yeah, I'm paying all of these traditional banks. Now you have a Bank Zero that is there, that is cutting all of that down. I'm like, yeah, this is the future that we're entering, and it's quite fascinating to unpack.
Yeah, the idea is that the only thing you have to pay for is data. You shouldn't have to pay for transferring your money the same way we don't pay for WhatsApp for sending. And that's why Michael Jordan said they're still in the age of SMSs, where you pay for every message that is sent out. They're not in today's world of WhatsApp.
The yellow pages, I laughed at that.
Yeah. Miles, what do you think?
I think for me, it's honestly just the fact that they're confident enough to call themselves Bank Zero. You know what I mean? So it's so much. It's not even just having the value proposition of wanting to pay nothing for their customers, but it's more so they've taken that value proposition and made it the face of their entire franchise, which says a lot about how much they back the idea of zero-rated banking. So I think it's not even just the fact that they have the idea, but it's just the amount of confidence that they have behind it that also blows me away. I think it's that nuance that got me.
And Michael, I see you have your hand up.
It's Panache.
Oh,
Oh,
okay.
okay.
I just wanted to make a comment. So what I've noticed with like the older generation, like let's say my parents, when they want to make an inquiry at the bank, they're more likely to go to the physical branch. Whereas with us, we're more likely to try and communicate electronically. So I just wanted to ask, what do you think would be the impact, or what do you think the population of the users of a bank like this would be? Do you think the older generation would be inclined to it? Would they warm up to it? Or do you think it's still something that's quite new age and would only be used by people our age, perhaps?
Yeah. So I thought about it too, that, you know, older people like going to a bank for help with various things. And really the challenge of these financial technology companies is to make it so simple and efficient that you never, ever have to go to the bank ever again. That's their challenge. I don't know how they'll solve their challenge, but think about it like WhatsApp, right? Have you ever needed to go into a WhatsApp branch to ask for anything? Or Gmail, when last did you walk into a Gmail office and say something is not working? Right? You just have to figure it out, don't you? And I think it's going to be the same when it comes to banking. It's more difficult because we're dealing with something as sensitive as money. But the idea is to make the technology so simple and seamless, right? To be able, opening up a new bank account should be as easy as opening up an email address. And I think they have the burden of providing learning material in the form of videos, whatever, all the support material that people need in order to never visit a bank again. When you think about the advantages, yes, it's one of the disadvantages is the older generation has a learning curve. But when you think about the advantages of not having to build a physical place to provide services to more people, this is equivalent to e-learning and having an online course, as opposed to needing to open a new university before more students can be allowed to learn. Right? The potential is just too great for people not to invest. Does that make it clear?
Can I add?
Thank you.
Can I add? I might not have been who did the presentation, but I think, you know, anything prior to COVID, I would have been worried about, you know, the older generation's ability to adapt. But I think one thing COVID showed everybody is that moving things online can actually be a lot more convenient than expected, because people were very reluctant for change until they didn't have a choice. And now for a lot of people, they, at least within the workspace, they enjoy the change. So I don't think in the long run, I suspect that there'll be hesitancy in the beginning, but I think long run, or long term rather, the change is going to happen.
Yeah, definitely. The change is going to happen, and it's going to be tough for traditional banks because they've bought all the infrastructure. They've set up their entire business model to work one way, and it's so difficult for them to just up and change their whole game. So financial technology companies, it's almost like the natural cycle of events, how the post office goes out of business because email, you know, during the days of the post office, people didn't think about days before the internet. People could not even imagine, you know, the post office was so grounded and pivotal to everybody's daily life. People did not imagine it going out of business. Today it's changed, it's gone. And I think with banking as well, as much as you think it's had its run, it's been around for hundreds of years, right? Hundreds of years. It goes back a very long time, and they've had a monopoly on this industry. And I think people are fed up, and people are innovating and jumping through loops, legal loops, to do so. And as you'll see in this presentation, in fact, there are threats on every key organizational structure, every key pillar of a value proposition of a bank. I was telling my partner just the other day that the only reason I keep money in my bank is to send it to my investing platform. So whenever I get a little bit of money, it's sending it to Easy Equities. I get a little bit of money, I'm buying cryptocurrency. I get a little bit of money, I'm sending it to other different platforms. I've made the adjustment, and I think people are going to follow the same adjustment. No money stays in my bank because I've realized that my money is lazy sitting in my bank. When my money sits in my bank, the bank gets to use it in a way that I could have. And once you make the leap to learning about this stuff, you start to realize that your money is being wasted sitting in a savings account because the bank is not even keeping it there for you. All you see is numbers on a screen that make you think that your money is there, but 90% of it does not even exist. So I see here that we have about 1 minute left. I didn't think that the webinar would actually go over 2 sessions, but I think we're going to need to have a part 2. So Emmanuel, I think we're going to need to break and then come back to do the rest of the presentation. Okay, so welcome to part 2 of our second ever wealth webinar. The purpose of this webinar is to discuss the significance of the recent partnership between telecommunications giant Telkom and fintech innovator of note Equities. To do this, I've prepared a presentation that gives us an overview of financial technology in general in an attempt to contextualize the conversation, because I believe those are where the true insights lie. Now, before we went for break, one of the members in the webinar had a question, and I think we're going to start by dealing with that and then jump right back into the presentation. So, Michael?
So, yes, thank you. I understand also banks are, I think banks as formal institutions, they are playing a vital role in society in the terms of, for example, they are very stringent on complying with tax requirements for the country in which they are situated. And I wonder now, with these new fintech solutions, how much are they going to be edifying to the local economy of the country we are operating? Ultimately, our wealth is really tied to the success of the country as a whole. The rand being weak is not going to help the local economy, or should I say, so I've been taking note of how, for example, Amazon and opening, I can't trade on the JSE as a Zimbabwean with the current way that Equities is working around the tax situations. And I came across a very interesting report when I was trying to get a rand account, where the one individual almost had to forfeit all his monies because he couldn't bring them into South Africa because of the litigation and tax requirements that had to be met with that income that he was trying to bring into the country. So how are these fintech solutions, have they been interacting with governments, and are they for empowering the local economy, or are they about empowering the individual?
So I think that's a very good question, but I think it's a deep and loaded question. There are definitely people who might have more insight to me about how these fintech players are communicating with officials in order to find a middle ground when it comes to regulation. I do know there was a recent tweet, and there should be an article out if you go out and look for it, that I think SARS was in communication with various cryptocurrency exchanges asking for their users' information, I think, in order to start implementing tax laws around cryptocurrency, because they realize that it's kind of here to stay. It's not going anywhere. So that was a recent article. I wish if I had the resources now, if I was prepared for that question, I'd be able to pull up that article in particular. So I think, you see, what I know is that the technology comes first, and then we figure out how to regulate it later. So think about what happened with social media companies and the privacy issue, right? So the social media companies innovated, they captured the entire market, and then there was various security or issues around privacy. There was a whole debacle in the US recently about these tech companies having a monopoly on users' data, and officials are constantly fighting with social media companies to implement different kinds of regulations and policies when it regards to privacy. I think similarly in the fintech industry, the officials have to catch up. in one way or another, because I know that a company like Easy Equities is very compliant with financial law. It has to be in order to operate, and other companies will just have to learn to follow suit, and it's up to our legislatures and our representatives to have the foresight to understand what are going to be some of the challenges and the regulations that we need to put into place. I saw a tweet this morning, I think it was still by Michael Jordan, and he said, imagine a world where Africa had one currency. He said that would make the way that we transact as a nation and grow as a people a lot easier. Part of the difficulties is that we are separate bodies with different legislations, with 52 countries with all their own currencies and all their own presidents, meaning all their own political parties and all their own policies. So those are things that are challenges on the macro level, but we can't deny the existence or the threat of these financial technology companies, especially in the global market, not just in Africa or South Africa. They make our lives easier, and things like that are very hard to stop. I did a specialization in financial technology from the University of Michigan, and I'm familiar with the fintech players overseas. I've tailored this presentation to deal with fintech players on a local level, but I know overseas they're much further down the line. Like I said, you already have your Alipay in China and your Wechat Pay. The Chinese government is already working on its digital currency. So they are much further down the line than we are. We are simply mirroring. You see what Easy Equities or the innovations that we have this side are just simply mirroring what's happening in the rest of the world. So it's an unstoppable force. Have I answered your question to some degree? I know I couldn't give you all the answers, but did I provide any clarity?
Yes, thank you.
Okay.
I think like you said it well, that it's new technology. SARS is clearly playing catch up to. Till today they have told us what's the real story of forex. I think people are now understanding how to make money in forex without getting in trouble. It's still playing catch up.
Yeah.
So it's really a case of the time game. So I wonder how quickly they can progress.
Yeah, it's up to our leaders, man.
It has to be able to, yeah.
Yeah, it's up to our leaders and
so is there case like that?
Sorry, Michael, I'm struggling to hear you because of signal, but I just want to point out to you, I don't know how many people know this, but Dubai has a minister of blockchain. How many people know this? It has a minister of blockchain, which is basically minister of Bitcoin.
That's a nice way to put it, but that is new information.
Yeah.
That's new information.
So, Michael, that's an example of how the rest of the world is taking it. Dubai has officially opened up the office of the Minister of Blockchain.
Yeah. Oh,
so I want to
progress.
Yeah, definitely. I want to continue with the presentation so that we have enough time, and we will definitely get into an in-depth discussion at the end if we do have time. So if you'll allow me, let's pick it up back where we left it. Give me a second to prepare my presentation again. And what I'll do now is I'll share my screen with everyone. Share screen, give me a second. There we go. My screen should be shared. Can everybody see this?
Yes, we can.
All right, so we had an kind of an in-depth discussion about the disruptive fintech players on the payment services category of a bank's value proposition. Now we're going to have a quick discussion on what's happening in the lending services, right? Moving on to lending services, new entrants into the market include peer-to-peer lending platforms whose innovation is bringing together lenders and borrowers. This is in direct competition with commercial banks' financing structures. Peer-to-peer lending platforms allow ordinary people like you and me, Michael, to lend each other money, and the technology facilitates this. Examples of these companies in the local space are companies like PureFin and RainFin. And when it comes to business lending, Telecom's giant Vodacom is not sitting this one out with their VodaLend platform. So you'll see I've written peer-to-peer lending platforms like PeerFin and RainFin, business lending platforms like VodaLend. So that's pretty interesting to see as a trend that technology companies are jumping into the financial services industry. I mean, this whole presentation, really, at the end, we're going to deal with Telkom and Easy Equities. Here we see Vodacom with a business lending platform called VodaLend. What these technology companies are realizing is the overwhelming opportunity that exists within the financial service industry. The truth is, traditional banks serve a minority of people when it comes to their financial needs. If I had the data to show you just how much of the African population is not fully serviced or registered with a bank account, you have I think in other African countries, you have companies like M-Pesa that is attacking on the payment services side, and that's just the testimony to how people are struggling to actually access traditional banking. So these companies, these telecommunications companies, are realizing data is everything, and they are finding loopholes in order to provide financial services to people like you and I without having to call themselves a full service bank, which can be worrying. The level that they're taking shortcuts and how they're jumping through loopholes to not have the same robust structures and regulations as a bank, but it is happening regardless. When it comes to lending services, it is generally agreed. I mean, all you have to do is look at the crisis when it comes to Black people accessing loans. And we're not educated on things like credit. So there are companies that are coming to service our needs where we are, instead of locking us out of the economy, right? Also, when it comes to lending services, traditional funding like initial public offerings have also seen rapid innovations, such as initial coin offerings in the crypto space. You see, unlike shares, cryptocurrencies are a technology with multiple use cases, and companies leverage those and reward owners for owning their various tokens. So remember, banks don't just service us as individuals. Banks don't just service people. I mentioned earlier that banks service businesses as well. So when we talk lending services, we're not just talking about banks lending us money. We're also referring to banks lending businesses money. And the way businesses used to raise money, well, at least on the equity funding side, is through IPOs, which is an initial public offering. They'll take pieces of their company and they'll offer it to the public market for the first time. So in order to raise that money, they gave you a piece of their company in the form of a share, right? A share is a security. Now what they're doing is that they are offering crypto coins to denote the same thing as a share would, so ownership. But the difference is you can't do anything with the share, right? You can't buy anything. You just own the company and it earns you money. But crypto coins are more useful, these tokens. They give you access to special features that the company is offering. And there's been a big boom in initial coin offerings as opposed to initial public offerings, right? We'll move over quickly to advisory services. We're still dealing with disruptive fintech players, right? When it comes to financial advisory services, well, two simple words: artificial intelligence. An article by Forbes indicates that the finance industry and artificial intelligence are a match made in heaven. You see, most critical factors that drive the financial sector are real-time data reporting, accuracy, and processing of data in large volumes. AI is perfect for these jobs, and that is why the financial sector is recognizing their accuracy by implementing machine learning and algorithmic trading. These days, you will hear about the Robo Advisors or at advisory services. You'll hear about the Robo Advisors that many financial investing platforms offer. These advisors use the power of artificial intelligence to build personalized and unique profiles for investors, depending on their financial goals. Robo advisors also have a huge advantage. If we're talking about a threat to the traditional banking system, robo advisors have a huge advantage over human advisors. To put it simply, robots don't need to earn a salary, making them significantly cheaper than human advisors. So much like in the payment services and Bank Zero, there's these robo advisors that are coming up, and they're much cheaper. When it comes to advisory services, you see, storing and sending your money, everybody can access that, as well as borrowing money to an extent. But when we start moving to these two branches of banking, this becomes a lot more exclusive, right? Most people have no clue about investing, so they take the generic products that the banks offers, and most people don't earn enough money to be sectioned off into the advisory services. So when you earn enough money in F&B, for example, you are sent over to a financial advisor to help you manage your money. But most people are stuck in this level of banking. Now you have robot advisors that are democratizing that and providing financial advice to everyone. So I've even seen robot advisors that can set up an entire investment portfolio based on your goals. You log in, you fill in a survey, you indicate your risk tolerance, you indicate how much you would prefer to gain, the percentage that you'd like to gain on your portfolio per month, and the robot advisor will lay out an entire portfolio of shares for you to invest in. And you can even subscribe to that advisor so that it executes the trades for you. Right. There's been a lot of movies on this front. Now, let's move on to the last one, right? Finally, we have investment services. And I don't really have to say much to convince you that the traditional finance sector has failed us in making investing simple and accessible for all. The buzzword really in this space is retail investing. Companies like Easy Equities are spearheading the financial revolution by providing low-cost, easy-to-understand investment platforms for all. So much so that banks are forced to open an open API system in order to provide more value to their clients. Capitec has led by example by providing an Easy Equities widget on their banking platform. So even on the investment services, what we should be establishing is that on all of the key value propositions of a bank, they are financial technology players that are coming in and doing it better, faster, and cheaper than a bank. Because banks are so big, because they've been a monopoly, they take very long to adapt to change, and people are taking advantage of that. Similarly, in a way that Eskom has had a monopoly on the energy services industry in South Africa for a very long time, so they've never been put under pressure. As soon as Cyril Ramaphosa has announced the ability for private companies to start producing renewable energy technologies, it's not going to be Eskom that's leading the revolution. Just like with the financial services industry, it's not going to be the banks leading the financial services revolution. The wheel turns. And with that being said, I'll bring everybody back just to reflect on what we've covered so far.
Awesome.
Yeah. Yeah. So who wants to comment first?
Yeah, okay. Yeah, Michael, you can go first. I'm also processing.
Yeah. Michael, anything to say?
I was just gonna say that it's very encouraging to see how. For me, it's about options. I think like you're saying, you use that word very well. Monopoly. They've been having a monopoly control over the whole system now. So even that whole story of the robot advisor. Right now the thing for me, I've heard like situations whereby people will try to consult someone who's working at Discovery or Sanlam or wherever it is. They don't want to tell you, they're not going to sell you a policy or a trust that is more suitable for you. Half the time they'll sell you one that's going to get them clear with the bosses for the month, or it's going to help them to meet their target in terms of sales of a certain policy that they're supposed to be selling for the month.
100%. 100%.
I can only imagine. Like, so what do these robot investors look like? Like, what website is that? I see on Easy Equities, you actually, they are investors who are hired by, who are writing up, who are drawing up this kind of things.
Yeah, easy research.
But I wonder, like, you're saying robot investors, but where specifically do you see that?
Okay, so with robot, okay, give me a second just to, because I have to manually change the screen to me. All right, with robo investors, I know overseas, because I did a fintech specialization, I know overseas there are companies, big companies like Betterment and Wealthfront, that have very, very successful robot advisors. These are trusted financial institutions, big institutions that have a reputation. So it's not just random people saying, hey, here's my robot that will teach you how to organize your money. I think there are many players that are trying to mimic what these big companies are doing. So in the Forex space, you'll hear every second person now has a trading robot that they're trying to sell to everybody. But those are the players in the international market. I'll give you one in the South African market now. It was actually on the presentation. So I don't know if I should share my screen with you quickly for you to see this,
Yes,
rather than just me telling you. Yeah, so my screen should be shared. I think you can see this, right?
Yes, you can.
So it was actually on, I just didn't read through this, but it was actually on my presentation. In South Africa, you have Signia. So you can look up Signia Robot Advisor. They actually launched a robot in 2016, and I think Signia also provides ETFs. So they've been in the investment space for a long time. They provide ETFs, much like, what's the other popular company that provides ETFs in South Africa? It's slipping my mind now, but everybody knows it, man. It's slipping my mind. That provides ETFs. Yeah, so baskets of shares that you can buy.
Yeah.
Online. I'm just forgetting, but there's a very popular one. I don't know why it's slipping my mind now. However, Signia, I think, also has its own ETFs, but they've released their own artificially intelligent financial advisory robot for South Africans. I've also written here they use artificial intelligence and machine learning to deliver customized investment advice. It's pretty shocking. It's pretty shocking because people are actually saying these robot advisors, their portfolios are actually outperforming humans in some cases. That's ridiculous.
I took notes of Old Mutual's unit trust. I think you need you can put up to like 10K in it. So the past 20 years or so, it grew by like 18%, but there was a time where it actually dipped not too long. I think there was a crash of sorts at that time. And it's being managed by these two very nice people. The one is a chem eng / MBA. The other person is a business admin / MBA as well. Just ordinary people like us. You know? I'm not saying they're not talented at what they do, but I was just fascinated by how it's interesting how the finances work. You know, you literally give all your millions to two individuals to do the right thing.
Yeah.
And some of the markets so I saw one of the biggest investments, one of the biggest shares they have is a minerals company. I just forget the name again, but they're a big player in the minerals game. Coal, I think they're doing coal, they're doing gold, I think. But one thing, and they also had money in Murray and Roberts, which personally, from my own knowledge, with my parents being in civil engineering, I know Murray and Roberts has not been doing well. So I'm very interested by how they've stuck with those companies. I wonder if they have some sort of affiliations. So
So what you're telling me is that a robot advisor might be more impersonal.
I think I'm very skeptical about why they would keep persisting with some of the investments. You know, so like for example, in construction is very bad. From what I've heard, there's a lot of corruption in the construction industry.
Yeah, and it's performing poorly.
Fragile.
For the past 10 years, it's been performing poorly.
Yeah, they're getting most of their business from the government as well.
Yeah, it's terrible.
Like they're making a product that can just be sold. to the next door country. You know, it's like they're relying on the government to release tenders and to give them that money.
It's terrible on the construction side. I think they're going to have to sell a lot of their assets because, I mean, now we're in the 3D printing revolution, and already in the world, they've been able to 3D print houses successfully. So we're not even, we don't get a window enough to what's happening around the world. People are planning to print entire houses with revolutionary building materials. And if you've invested a lot in a certain way of construction, then construction companies, it's not going to get easier for them, is what I'm saying. So, Emmanuel, any reflections on what we've just presented?
Yeah, I think just piggybacking off what Michael said, that robotic advisory space, and just thinking about it, I'm like, it's like you feeding a model, to say. It's like you keep on tweaking until it becomes so close to perfect. Because now, just using that example with people who are operating these unit trusts, to say, they will have their certain biases, probably because they're human beings as well. Now, if you have a robot advisor that is impartial, that can take information and look at it rawly and process it, I think that kind of space is very, very, very disruptive. And I'm just thinking, maybe, I don't know if this is a question for now, but probably for later. But then it's like, if our traditional banks have been on this trajectory, and with these new technologies that are coming up, what position does it leave our traditional banks? To say, do they have to follow and find their own technologies as well to start implementing, or they keep up to what they have set out beforehand and stuff, because of all of these new players that are coming in that are really well advanced in the space?
That's a great question, and it's a good time to segue into the rest of the presentation here. All right. So I'm assuming you can see my screen right about now.
Yes.
So that was a very good question. And to answer it, I want to read to you a couple of quotes, right, by industry experts. Right. So on just what you've said, JP Nichols, co-founder of Alloy Labs, Emmanuel, he says that banks have to upgrade themselves or risk being burnt to the ground. That's what he says. Over here, Andrew Wu, this is a professor at the University of Michigan. He runs the financial technology course. He says, historically, it has always been the banks, investment managers, and hedge funds who are the trailblazers in most technological innovations for money. For the first time, we are seeing tech companies like Google, Amazon, Facebook take on finance functions, right? That's what he says. Chris Skinner is a fintech blogger. He says that by partnering with fintech startups, banks will give their account holders the right measure of security and speed. This is the way to become a digital bank. So when you ask the question, Emmanuel, what do banks have to do in this space? I would love to say that they have to just completely change their business model. I'd love to tell you that. But there's various ways, that's not completely practical. Banks employ a large number of people, and they face the same challenges as many industries face. But there's ways that banks are trying to combat, if you can't beat the competition, join them, right? PayPal offers you Bitcoin. You can buy Bitcoin on PayPal. That's an example of how fintech companies are realizing that, in order to provide more value to your customers, sometimes you're going to have to include other incumbents. A great example of a company that does this well is Capitec. Capitec is a bank, right? It probably offers investment services, but it's realizing that Easy Equities is doing it much better. So instead of fighting with fintech companies, I said earlier that banks adopt an open API system. Capitec has done that and has included Easy Equities as a widget on the platform. So they can't beat what Easy Equities is doing. Might as well offer Easy Equities on the platform in order to help you bank with Capitec more. I won't lie, banks are in a stranglehold, right? And they're in trouble, which is why the whole purpose of this presentation was to get you to understand just how much banks are in trouble and why it is important for you to own shares in a company like Easy Equities, right? If Easy Equities grows in its investment offering, right, you need to understand that its competition is a bank, and you know how wealthy banks are. Stop looking at these fintech startups as just small little companies that are doing impressive things. Look at it as a whole revolution, and it's a revolution that's currently on offer for you for R1. So when we talk about the significance of the Easy Equities deal with Telkom, it's understanding that Easy Equities is finding itself in more spaces and growing in order to challenge traditional finance institutions. And the opportunity to own a piece of that progress and growth cost you R1. You should be a lot more proactive in acquiring those shares. You should be a lot more proactive in trying to understand and making sure that you have a piece of what's going on here. That's what I was hoping to communicate throughout this entire presentation. I can see we have about 8 minutes left, so I really want to jump in quickly on some details about the Easy Equities and Telkom partnership, as this webinar suggests, right? So Telkom partners with Easy Equities after signing up 100 digital wallet users, and we've had an extensive conversation about financial technology, and you now know what the value proposition of a digital wallet is, right? It's on the payment services pillar of financial services, and it simply just allows you to store and transfer money. Now, if we keep reading here, Telkom is expanding its mobile finance services and has partnered with low-cost investment platform Easy Equities. The telecommunications company will relaunch its digital wallet service in June following a pilot program which attracted more than 10,000 users. Telkom Pay digital wallet allows users to send and receive money via WhatsApp. Right. Now, because of the conversation we just had, we also spoke about on the payment pillar, we spoke about Alipay and Wechat Pay in China. You can start to see where these trends are emerging, and that these people are not just making random business decisions. They've seen business models that work and are implementing them here. But its competitors, MTN and Vodacom, have a head start and have also recently announced improvements to their mobile payment platforms. So even MTN, we spoke about the trend of Telkom, Vodacom. Here's MTN showing up, and they also have a mobile payment platform. This just shows you that whoever are in charge of these companies, they understand the value that's here and the opportunity that stands before us. We could get into really the details of what the deal entails, but I think the most important thing to understand is, where does Easy Equities and Telkom fit in the entire ecosystem of financial technology and financial services? I think this presentation has done a great job in outlining for you the general play field, and has given you at least avenues for you to study further what's going on. So in order to conclude my presentation on the significance of Telkom's deal with Easy Equities, I'd say the significance is more than just this deal. It's the entire ecosystem. And I'm sure if I could come up with these insights, then the visionary leaders that are heading these companies are aware of all of these opportunities and are going to make full use of them. With that being said, that's been my presentation, and I guess we can get some final thoughts from everybody still in the webinar.
Thank you so much, first and foremost. That was a wonderful presentation. And I think to close it off with the Telkom and Easy Equity deal even adds more emphasis to that article that I've read. Because I read it and I'm like, I couldn't really understand exactly what is happening within that space. But now after this presentation and seeing how major these fintech companies are moving, I'm like, yeah, I can pay more attention to these big players and be like, yo, this is what's disrupting the finance space, and invest in them, basically. Invest in the purple group, invest in these fintech spaces, and really unpack what they're about.
It literally costs R1. I have R5 sitting on my dashboard right there. That can buy me almost 4 shares right now.
Yeah, you see, stuff like that, the value of even R1 to buy a company that is in the disruptive space of breaking up these financial institutions. I'm like, yeah, that is really something. It's really something to know.
Michael, after this presentation, do you feel a lot more pressure in owning a company like Easy Equities? Have I made a positive enough investment case?
Let me say not pressure, motivation, inspiration. I think the idea, like you were saying, one thing I took from what you were saying was do it little by little. Look at it as a long-term thing. I'm not going to give them 1,000 rand and expect them to give me 2,000 tomorrow. I was going to have to acquire in amounts. Look, I can see the bubble right now. Maybe it's going to blow up whenever people catch up. But you said something very interesting. These things really only blow up once people can't even ignore them. When it's like all over now. When Cyril has put in 2 McDs in Boulevard, you can't deny it now. It's all over. I see McDs in the randomest places, the randomest villages, bro.
Yeah.
I'm like, what is this McD's doing? And that's just testament to how these things just creep up. And so I think one thing we were just talking now with my partner was that we can start this week. We take the little bit of money that maybe you call it lunch money or whatever. You can take that money and stay there now.
Yeah.
Use it to just acquire small by small.
Yeah, get exposed to the opportunity. Is she there as well? Can we get some final thoughts from her in the final 2 minutes?
Yes, I am. I just wanted to say thank you so much. That was a really great and well-prepared presentation. And I think it just helped to give like a lot of insight on things that sometimes you just hear people mention, but when you get this type of in-depth explanation, it just puts the whole picture into perspective. So thank you so much for that.
Okay. Yeah, no problem. And that was the purpose of this presentation. So I'm glad that everybody has gotten some insight into what's going on in the spaces. If I were to have any final words, it literally would be, guys, all the money that you have that you're not using, buy Purple Group. It's not the only, Easy Equities is not the only company that's going to be disruptive in a significant way. But right now, before Easy Equities, could we even have a conversation about investing? We couldn't. FNB has had FNB shares saver for a long time. Standard Bank has its share brokerage trading platform, but we never had a conversation about investing like we do now. And this is the beginning of their journey. Like I said, it's 1 rand to get exposed to the opportunity. I've seen a lady who, as soon as she got 50K from her work, she invested 50K and she's now made 3 times her money. Her money is sitting at around 150K. And it's the beginning it's not even the beginning of Purple Group's real rally. Right? Let's not even mention what they're doing to democratize property ownership with Easy Properties. But we only have a minute left. We can't get into depth with all of that. I think that would be my takeaway message, is that this is basically a bull case for Purple Group, and any chance that you get to invest in it, I certainly will be investing it. That's all of our time. Thank you everybody for coming to the presentation. Thank you, Emmanuel, for hosting it. And this will be up on YouTube for everybody to enjoy. I think at this point, we can end the webinar.
Thank you.
Thank you very much, sir.
Cool.